Welcome to Nonfarm Market Perspectives.
Hey everyone, welcome back to Nonfarm Market Perspectives. It's Friday, and that means it's time to wrap up the week and take a closer look at how the markets performed. Here's what we're covering today. First, we'll start with a full S&P 500 performance review. We'll see who came out on top, who struggled, and what key trends shaped the market this week. Then we'll break down the impact of interest rates, inflation updates, and major financial events. Did things play out as expected, or did we see any surprises? And of course, we'll check back on our Monday stock observations. How did they perform? Were there any key takeaways we should keep in mind? Now, just a quick reminder. This isn't financial advice. We're here to help you understand the market so you can make informed decisions for yourself. And before we dive in, we want to hear from you. Got a stock or a topic you'd like us to watch for next week? Drop your thoughts in the comments. We'd love to know what's on your radar. If you're enjoying these insights, hit that subscribe button and share this with others. Now let's get into what happened this week. The S&P 500 closed another highly volatile week as investors grappled with inflation pressures, Federal Reserve uncertainty, and Trump's new 25% tariffs on Mexican and Canadian imports. While the automotive sector was granted a one-month exemption, the broader market saw increasing concerns over supply chain disruptions, weighing heavily on semiconductor and consumer discretionary stocks. In this environment, investors rotated toward defensive sectors like healthcare and energy, while technology and consumer cyclical stocks faced strong selling pressure. Let's break it all down. Who gained, who lost, and what to expect next week. Market winners, defensive plays take the lead healthcare stocks. Gain as investors seek stability. With sticky inflation and delayed rate cut expectations, defensive healthcare stocks saw steady inflows. However, not all names performed equally this week. Eli Lilly plus 0.84%. Continued momentum in obesity and diabetes drugs supported investor confidence. Johnson & Johnson plus 1.28%. Strong balance sheet and steady revenue growth attracted defensive capital. Merck plus 3.78%. Keytruda's dominance in oncology remains intact, boosting investor sentiment. Gilead Sciences plus 3.62%. New FDA approvals for its antiviral treatments lifted the stock. Key takeaway, investors turned to reliable earnings growth and strong cash flows amid uncertainty, but gains were modest compared to previous weeks. Energy stocks gain on oil market strength. Despite recent volatility in crude oil prices, energy stocks remained a safe haven amid inflation concerns. ExxonMobil, 2.30%, and Chevron, 2.37%, saw minor declines, but remained relatively stable compared to the broader market sell-off. Oil prices held firm, supporting the long-term investment thesis for energy as an inflation hedge. Key takeaway, energy stocks were resilient, but did not see strong gains, reflecting uncertainty in global oil demand. Communication services, a mixed bag Alphabet, Google, plus 2.35% outperformed, benefiting from AI-driven revenue growth and ad market resilience. Meta, Facebook, minus 4.61%, saw selling pressure as concerns over advertising revenue sustainability emerged. Key takeaway, AI and cloud computing remain key investment themes, but valuations are being reassessed across the tech sector. Market losers, technology, retail, and trade war concerns. Tech stocks under pressure as valuations get adjusted. After a strong start to the year, investors took profits in tech stocks, especially in software and cloud-based businesses. Oracle minus 8.39% and Palantir minus 5.08% all faced selling pressure amid concerns about growth sustainability and elevated valuations. Key takeaway, investors are favoring value over growth stocks, meaning tech names with high PE ratios are at risk of further downside. Semiconductors hit hard by trade. War concerns, the new 25% tariffs on Mexico and Canada raised alarm bells for semiconductor companies, which depend heavily on global supply chains. Broadcom, 9.28%, was one of the worst performers this week, hit by concerns over component costs. Nvidia, 7.97%, declined as investors took profits and feared trade restrictions. Advanced Micro Devices, 0.66%, and Qualcomm, 1.04%, saw mixed performances with uncertainty over supply chains weighing on sentiment. Key takeaway: the semiconductor sector is at high risk of further declines if geopolitical risks persist. Consumer stocks struggle amid weak sentiment and tariffs. The combination of rising interest rates, slowing consumer spending, and tariffs weighed on consumer stocks. Amazon minus 3.85% saw a sell-off as e-commerce demand is expected to slow. Tesla minus 6.56% remains heavily exposed to tariffs, though it was granted a one-month exemption to adjust supply chains. Home Depot, 2.19%, struggled as weak housing data pointed to slowing home improvement demand. Key takeaway: consumers are tightening their wallets, and higher costs from tariffs could worsen the situation in the coming months. Economic data recap. What's moving the markets? This week's economic data painted a mixed picture. Inflation remains high, the job market is cooling, and global trade tensions are heating up. Here are the top 3 market-moving indicators. Eurozone Core CPI, 2.6% year-over-year. Inflation is still stubbornly high, keeping the ECB in a tough spot. Rate cuts, not so fast. U.S. Nonfarm Payrolls, 151,000 jobs added, weaker than expected, signaling a cooling labor market. But wage growth is still at 4.0% year-over-year, meaning inflationary pressure remains. Mexico CPI, 3.77% year-over-year. Inflation is stable, but Trump's tariffs create uncertainty for Mexico's economic outlook. Other key data: U.S. unemployment rate, 4.1%, slightly higher, showing early signs of labor market weakness. ISM manufacturing PMI, 50.3, still in expansion, but just barely. U.S. trade balance, minus $131.4 billion. Widening deficit as import costs rise under new tariffs. What's the big takeaway? The economy is slowing, but inflation is too high for rate cuts just yet. Expect market volatility to stay elevated as investors digest Fed policy, labor shifts, and trade war risks. Bonus section: Costco, Broadcom, and VOO ETF analysis. Broadcom, a key semiconductor player, facing headwinds. Earnings per share, EPS, $1.60, beat expectations of $1.51. Revenue, $14.92 billion, beat expectations of $14.62 billion. Performance, down 9.28% due to tariff fears and broader semiconductor weakness. Technical analysis: trading below the Ichimoku cloud, meaning bearish sentiment is strong. MACD remains negative, suggesting a potential further downside unless sentiment improves. Key takeaway: Broadcom is at a critical technical level. A bounce is possible, but only if trade tensions ease. Costco, a defensive retail giant, EPS, $4.02, missed expectations of $4.09. Revenue, $63.720 billion, beat expectations of $63.3 billion. Performance: the stock held up better than most, but the EPS miss led to hesitation among investors. Technical analysis: Costco remains above key support levels, but MACD is flat, suggesting neutral momentum in the short term. Key takeaway: Costco remains a strong long-term investment, but consumer sentiment is a key risk moving forward. VOO ETF, a steady play in a volatile market. Broad market exposure makes it a top choice for long-term investors. If the S&P 500 stabilizes, VOO should follow suit. Key takeaway: VOO remains a strong hold for passive investors looking to ride out short-term volatility. The VIX Index. Volatility is here to stay. The VIX surged to 22.65 this week, signaling rising market fear as investors react to inflation concerns, Fed uncertainty, and new tariffs on Mexico and Canada. A VIX above 20 suggests we'll see continued volatility next week, with larger price swings in stocks. If the VIX breaks above 25, expect more aggressive selling pressure and potential market pullbacks. On the flip side, if the VIX drops below 20, That could signal stabilization and a market rebound. Key takeaway? Brace for a choppy market ahead. Volatility is back, and traders are hedging their bets. What's next? Tech stocks took a hit as investors took profits. Tariffs are in effect, but auto companies got a one-month pause. Inflation is still too high, delaying any Fed rate cuts. Broadcom and Costco had mixed earnings, but remain strong players. What do you think? Drop a comment, like and subscribe so you never miss an update. See you Monday for our next market preview.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Nonfarm Market Perspectives. Next time on Nonfarm Market Perspectives.